Welcome to our latest EUR USD analysis report covering the period from September 29th to October 4th, 2025. I'm your host from FXTech, bringing you comprehensive insights into one of the world's most traded currency pairs. In today's presentation, we'll examine the recent price movements, technical indicators, and key market events that have influenced the euro against the US dollar. We'll also provide actionable trading strategies for both short and medium-term horizons. This analysis has been meticulously prepared with data from leading financial sources and updated as of October 6th, 2025. Let's dive into the details of what's been happening with the euro to US dollar pair. Let's start by examining our data sources and the current price information for the EUR/USD pair. Our analysis draws from four leading financial platforms: TradingView for real-time price data, investingLive for market commentary, ActionForex for technical analysis, and DailyForex for comprehensive forecasts. As of our latest update, the EUR/USD is trading at 1.17413, showing a daily gain of 0.22%. The pair opened at 1.17151 and has traded between a high of 1.17591 and a low of 1.17117, with moderate volume of 181.83K. Looking at the chart, we can see that after a period of consolidation in late September, the pair has begun to show upward momentum in early October. This recent price action follows the Federal Reserve's interest rate decision, which has been a significant market driver. The current price sits above both the 100 and 200-hour moving averages, suggesting a positive short-term technical outlook, though several resistance levels remain overhead. Turning to the technical performance of euro to US dollar, we can see impressive gains across multiple time frames. The pair has shown positive momentum with a 0.22% gain over the past day and 0.30% over 5 days. More significantly, it's up 0.69% over the past month and a substantial 7.84% over 6 months. Year to date, EUR USD has gained an impressive 13.39%, reflecting the broader trend of dollar weakness against the euro throughout much of 2025. Looking at key technical indicators, the RSI currently sits at 48.2, indicating neutral momentum. The MACD has recently formed a bearish crossover, suggesting some potential short-term downside risk. However, moving averages remain bullish, with price holding above key moving averages. The Bollinger Bands show the price trading near the middle band, indicating reduced volatility, while the stochastic oscillator is in overbought territory, potentially signaling a pullback. The chart clearly shows the recent consolidation pattern followed by the upward break. Pay particular attention to the 1.1733 level, which has proven to be significant support in recent trading sessions. Let's examine what leading market analysts are saying about EUR/USD. We've compiled insights from 3 major sources to give you a comprehensive view of expert opinions. investingLive maintains a neutral bullish stance, noting that EUR/USD buyers are making a play, but there has been a limit so far. They highlight the critical support at the 100 and 200-hour moving averages around 1.1733, and observe that while price has broken above the downward trend line, momentum has stalled at the 1.1759 resistance level. ActionForex takes a more bearish view, suggesting that EUR/USD has remained range-bound above 1.1644 with the outlook unchanged. They believe further downside is favored as long as the 1.1819 resistance holds, and point to bearish divergence in the daily MACD as a concerning signal. DailyForex adopts a neutral position, describing the euro as volatile and capped by 1.18 resistance. They note support at the 50-day EMA and trendline, with potential for breaks lower to expose the 1.16 to 1.14 region, while bulls are targeting the 1.19 to 1.20 zone. The sentiment chart shows the overall consensus is slightly bearish at minus 0.7 on our scale, with ActionForex being the most pessimistic and investingLive showing moderate optimism. Several significant news events have impacted euro to US dollar during our analysis period. Let's review the most important developments. The Federal Reserve delivered its first interest rate cut on September 30th, reducing rates by 25 basis points to 4.00% to 4.25%. This highly impactful decision marked the beginning of the Fed's easing cycle, though Chair Powell's risk management approach suggests a measured pace for future cuts. On September 29th, the European Central Bank signaled that its rate-cutting cycle may be ending, providing some support for the euro despite persistent economic weakness in key Eurozone economies. This medium-impact announcement helped establish a floor for the euro. Political uncertainty in France continues to pose a risk to the euro, with concerns about fiscal policy and government effectiveness adding downside pressure to the common currency. This situation remains fluid and warrants close monitoring. Finally, economic indicators from both the US and Eurozone came in stronger than expected on October 3rd to 4th, particularly the US non-farm payrolls and Eurozone retail sales. These positive data points have supported the recent euro to US dollar uptrend. As shown in our chart, these events have created a mixed but generally supportive environment for EUR/USD, with the Fed rate decision being the most significant driver. Understanding the key technical levels is crucial for trading EUR/USD effectively. Let's identify the most important resistance and support levels to watch. For resistance, we have three critical levels. First, 1.1917, which represents the 4-year high reached on September 17th. This is a major psychological barrier that bulls will need to overcome for a significant upside breakout. Second, 1.1819 serves as a key resistance level that has repeatedly rejected upward movements. Third, 1.1759, the October 2 high, represents the most recent failed attempt at upward momentum. On the support side, 1.1733 is particularly significant as it represents the convergence of both the 100-hour and 200-hour moving averages. This level has proven to be robust support and serves as the risk and bias level for many traders. Below that, 1.1675 aligns with the 55-day EMA, providing secondary support. Finally, 1.1644 represents a key support level that, if broken, could signal a deeper correction. The chart clearly illustrates these levels and their recent importance in price action. Note how price has repeatedly respected these zones, creating opportunities for both range-bound and breakout trading strategies. Based on our technical analysis, we've developed two primary short-term trading strategies for EUR/USD. First, a range trading strategy that capitalizes on the current consolidation pattern. The buy zone is between 1.1733 and 1.1740, coinciding with the critical support level we identified earlier. Target profits at 1.1780 to 1.1800, with a stop loss at 1.1700. This provides a favorable risk-reward ratio of approximately 1 to 1.5. Second, a breakout strategy for more aggressive traders. Enter long positions on a confirmed break above 1.1819, targeting the previous high at 1.1900 to 1.1917. Place your stop loss at 1.1780 to protect against false breakouts. This setup offers an attractive risk-reward ratio of about 1 to 1.8. Several key events could impact these strategies in the coming days. Watch for the U.S. non-farm payrolls and Eurozone retail sales on October 4th, as well as the ECB meeting minutes and U.S. ISM Services PMI on October 3rd. These events could trigger significant volatility and potentially create entry opportunities. The chart illustrates both strategies, showing the key entry points, targets, and stop levels. Remember that proper risk management is essential, particularly around high-impact news events. Looking beyond the short term, We've identified two potential scenarios for EUR/USD over the next 1 to 3 months. Our primary scenario, with a 60% probability, is bullish. This outlook is predicated on several conditions: the Federal Reserve continuing its rate-cutting cycle, the ECB maintaining current rates, Eurozone economic data stabilizing, and global risk sentiment remaining positive. Under these conditions, we expect EUR/USD to target the 1.1917 level initially, with potential to reach the psychologically important 1.2100 level. The alternative bearish scenario, which we assign a 40% probability, would likely occur if the Fed slows its rate-cutting pace, Eurozone economic data deteriorates, the French political crisis escalates, or global risk aversion increases. In this scenario, EUR/USD could decline toward the 1.1390 to 1.1500 range. The chart illustrates both pathways, with the bullish scenario showing a continuation of the uptrend that began in mid-2025, while the bearish scenario indicates a potential reversal of the recent gains. Key factors to monitor include the pace of Fed rate cuts, ECB policy statements, and economic data releases from both the US and Eurozone. The divergence between US and European monetary policies will be particularly influential in determining which scenario unfolds. Finally, let's assess the key risks that could impact EUR/USD in the coming weeks. Understanding these factors is essential for managing your exposure and adjusting your trading strategy accordingly. On the upside, three main factors could drive euro to US dollar higher. First, an acceleration of the Fed's rate-cutting cycle has a high probability and high impact potential. Second, a stronger than expected Eurozone economic recovery carries medium probability and medium impact. Third, a resolution to the French political uncertainty has low probability, but would have a high impact if it occurs. Conversely, downside risks include a potential Fed pause in its rate-cutting cycle, which has medium probability but high impact. Eurozone economic deterioration remains a concern with medium probability and medium impact. Geopolitical tensions round out our risk assessment with medium probability but relatively low direct impact on EUR/USD. The risk matrix visualizes these factors according to their probability and potential market impact. Note that the Fed's monetary policy decisions remain the dominant risk factor in both directions, highlighting the importance of closely monitoring Fed communications and economic data that might influence their decisions. This concludes our EUR/USD analysis for September 29th to October 4th, 2025. Thank you for watching, and remember that all trading involves risk. Past performance is not indicative of future results.